Hello, investors. On Wednesday, November 1st, Chairman Jerome Powell announced that he was not going to increase interest rates for the month of November. This caused the markets to turn green. There was a lot of bullish sentiment on the markets, but my job is to give you the big picture and don't trade on emotion, but just look at everything else. Let's look at what's not so good. Number one, credit card debt. Consumers, for the first time ever, have passed over $1 trillion on credit card debt. Not good. You also got the debt ceiling. A couple months ago, we passed the debt ceiling and we just kicked it down the curb. We're like, we'll worry about it later. And that later is yet to come. You also have the government shutdowns. Same thing. We were like, we'll kick it down the curb. We'll worry about it later. Well, later's not here yet. Then you have student loan debt. For people that were paying $300, $400, $500 a month for like their student loans, after 2020, with the whole COVID stuff, they pretty much said, I know times are tough. You don't have to pay us back right now. Well, starting October, which was last month, they were like, okay, you know what? That's enough time. You got to start paying us back. Oh, if you're not going to pay us back, we're going to throw you some interest in there. So for years, we're in 2023, 2020, 2021, 2022, and now 2023. Like a lot of these people, they're not used to that $300, $400, $500 a month debt. So this is really going to hit the economy. The bigger thing is also for me, in my case, is the unemployment rate. It's getting closer to 5%. And yes, that's what Chairman Jerome Powell wants, like as close to 5% unemployment as possible. But you also got to think about it, that there is more and more and more people losing jobs. If you don't have a job, you just can't pay bills. So how did I use that information for my stocks? Check this out. Now, before I tell you my moves that I did, I must give you a disclaimer. I am not a financial advisor. This is not financial advice. This is just for informational purposes only. I'm just telling you what I'm doing. So check this out. I did a big move on Intel, ticker symbol INTC. Now, personally, I love Intel. It's a chip company, but it heavily focuses on AI. For those of you that don't know, that's artificial intelligence. And right now, there's a boom on AI. Anything AI is pretty much making money. Like if a company says that they're leaning towards like AI, like almost immediately their stock goes up. It almost reminds me of like the .com bust, where anything .com was making money. And going back to Intel, it really helps when you have leaders like Nvidia and their CEO saying, yeah, that company, quote unquote, looks good. So I love Intel. And I got a big position on Intel when they decided to cut dividends. Now, some people might argue, well, if they're cutting dividends, that means they're not making as much money. True, but you also got to see is that they're being responsible about it, where, they don't have as much money to give their investors. You see, dividend is basically like a nice way of a company to tell you, you know what? Thank you for holding our stock. Here's a couple cents. And you get more money. Now it's up to you whether you want to reinvest it and get a bigger position, or you just want to like cash out and use the dividends for whatever reason. The point I'm trying to make is that I have a big position on Intel, and I was really waiting for like the earnings to come out. So when the earnings came out, of course, they just beat expectations. They were estimated 21 cents estimated price per share. And they actually got 41 cents. So they beat expectations. So now my position in Intel, even though it stayed the same, I made a lot of money because of that, because the stock went up. Now, when the stock went up, I saw like that Chairman Jerome Powell did not increase interest rates. So everything turned green. Now, I was a little nervous because what if they would have raised interest rates? That chances are would have turned red, and I didn't want to take that risk. So what I did was that after I saw that they beat earnings, I cashed out like a little bit of my position. However, as an investor, remember what I told you guys. Bulls make money, bears make money, but pigs get slaughtered. And at that point, I was going to be a little too cocky. Why? Because I knew all the negative things that are happening, yet I was still hopeful. No. So what I did was once Intel said that they beat earnings, I got a whole bunch of position. Now let's see how much I made. So what I did was I had 101 shares valued at $3,669.79. Now what I did was after the earnings, I locked in $2,900 worth. That's 26% my money. Yeah, that's right. 26% my money. So even though the stock went up higher after Jerome Powell, I'm okay with 26%. Like, who's going to give you 26% on 3,669 with 79 cents? Like, it's just not going to happen. So I'm just happy that I made money. And now the best part of all this is the remaining, which is 757 with 24 cents and counting, because I'm still leaving it there. Like, that's house money. Like, I care if it goes up or down, but it's not money that's mine anymore because that's the profit that I made. So I'm chilling. I am chilling. Also, one big thing that I did also was that I looked at when I bought Intel, and it was over a year ago. So that means I made capital gains. So in other words, when Uncle Sam says it's time to pay my taxes, because I did a long-term capital gains, I hold the stock over a year, I pay less. Now, if I were to sell it before a year, is short-term capital gains, and I have to pay more taxes on that. So I already qualified for long-term capital gains. And also because I beat earnings, I was already up 26% my money. So I cashed out. You know, I got that part, and I am so happy. One thing that I wanted to mention as well is, check this out. Even big players like Michael Burry, for those of you that don't know, Michael Burry is the guy that pretty much predicted the house market crash back in 2008. And look what he did. This was posted August 16th, 2023. Michael Burry of The Big Short, though you guys haven't seen that movie, it's really good. He just bet 1.6 billion. That's what the billion on a stock market crash. So I would rather lock in my 26% on Intel than just kind of risk it. You feel what I'm saying? Now, I do love Intel. I do plan to go back to Intel, like dollar cost average. But right now, I just wanted to lock in some gains. I do want to keep this video short so I could keep your retention levels on. So let's just run through some numbers. Let's take a look at the GDP, the gross domestic product. Now remember, 2 consecutive back-to-back negative GDP reports equal a recession, generally speaking. So there has to be 2 negative GDP reports to be considered a recession. Now the problem is, when the numbers came out, it was in positive territory, positive 4.9. Now that is not an indication of a recession. Why? Because it's in the positive territory, not negative. So now that it's positive, technically speaking, the earliest we could have a recession would be in 6 months. Why? Because they're quarterly. There's a report 4 times a year. It's every quarter. So that's with the GDP. Now let's take a look at unemployment numbers. Unemployment for October came out at 3.9%. Remember, the feds want to have it as close to 5%. Speaking of the feds, let's take a look at when the next meeting is. The next meeting is going to be held December 12 and 13. There, Chairman Jerome Powell is going to announce if he's going to increase interest rates. So now that we have all that, let's take a look at the major moves that I did just to make sure that we covered everything. So we go here, 11.6. First thing, again, we already talked about this. Intel beat expectations. We did talk about the GDP report numbers at 4.9%, positive territory. We also talked about me locking in 26% on Intel. We talked about capital gains. And I was going to do a massive buy on TMF. Now, for those of you that don't know, TMF is a triple leverage 20-year treasury. But since they did not increase interest rates, TMF went up because it has like an adverse effect. Whenever the Feds increase interest rates, treasuries go down, and then vice versa. Whenever they decrease, treasuries go up. And right now, treasuries have been getting hit hard. So even though I didn't make the big purchase, I'm probably going to wait until Wednesday. And then on Wednesday, I'm just going to buy maybe $800 or something. Either way, if you have me on Instagram, I'm definitely going to post how much I'm going to put. It's most likely, you know what? It's going to be $800 as long as the price is under $5. Now, speaking about price being at $5, because now since it's under $5 and it's been at under $5 for a while, they have to follow certain like protocols and stuff because there's rules for under $5, quote unquote penny stocks. So there's a good chance that they're going to do a reverse stock split. Now, a lot of people have heard of what a stock split is. So that's like basically if a company, as a matter of fact, Amazon not too long ago did a stock split, so did Tesla. So if they have a stock, they could actually split those into equal parts. And even though you're still going to have the same value, you're going to have more shares for the same price, but you don't lose money. Well, reverse stock split is the other way around, where if you have a lot of stocks, you go back to having less stocks, but you don't lose money because the value stays the same. So obviously, like in the future, keep in mind that if they do a reverse stock split, which they're already talking about, personally, I like it because psychologically speaking, it's like, would you invest in something that's $3 and change, or would you invest in something that's like $30 and change, So the psychology, now this is just my mind playing, but you could argue that if you buy one stock at $30, that's like buying 10 of them, but that's just the way I think, Let's see what else. Yes, Federal Reserve leaves interest rates unchanged despite stubborn inflation. We talked about that. And let's see. Yeah, we already talked about this, the whole TMF by 800. Now, TMF for me is a long-term play. Now, usually I don't hold triple leverage things for long-term, but because this is a treasury, like this takes a while because the Fed meetings, they don't happen every day. They happen every month, every other month. So chances are if there is a recession or when things start to look better, they're going to start easing on interest rates. And that's when the stock that I'm going to get is just going to skyrocket, that treasury, TMF. Not financial advice. With that being said, that brings me to the end of my video. If you did like this and found this informative, please don't forget to like, subscribe, and hit that bell icon so you can get notified whenever I post new videos. Until next time, good luck investing.